Hey, all, Josh Catagano here, and I'm the man that puts the fun in funding, but holy shit, what the hell has been going on this week, right? I'm going to do my best to keep you updated and informed as to what's happening with the housing market and rates and Corona, just a bunch of things that have been going on this week. First off, let me just say congratulations to my peoples at Princeton Mortgage. We are a comparatively low-risk mortgage company, but thanks to our leadership, we still originated 3 times the amount of loans in March than our previous best month ever. So kudos to everybody there. All right. Although originations are strong, the industry is facing a severe liquidity crisis that is impacting every mortgage company. I'm not trying to scare anyone, but I think it's important that you understand what's going on out there. Servicing values have completely evaporated due to the prepayment and higher expectations of default. Non-QM, non-conforming, are gone. Today, Wells Fargo suspended all non-conforming loans. Not only that, but they also raised their FHA credit score requirement to a 680. Thankfully, at Princeton, we're still at a 640, so we're able to get more loans closed. But guys, it's happening across the board, and it goes pretty deep down the rabbit hole too. Since we're talking about Wells Fargo, they've outsourced a lot of their help to India, which is in a lockdown, just like the United States. But unlike in India, these folks, they don't have the internet in their homes. They can't just set up a home office and work from home like we can. Think about how that's going to affect all the people trying to ask for help right now. Lenders are completely shutting down. Impac is a publicly traded mortgage company. They suspended all operations due to the losses on their hedged pipeline. Quicken Loans, UWM, two of the largest lenders in the country, they're not even locking loans until they're clear to close. There's just a dislocation between market-backed securities and wholesale loan pricing. Our corresponding investors, they typically price in 20 to 40 bips of margin. Their rate sheets now imply that they're pricing in 200 bips of margin. That has caused a total dislocation between the performance of our hedge and the price we get for our loans once we close them and try to commit them to an investor. Typically, the gains, losses on our locked pipeline and our short MBS positions work like a seesaw. One goes up, the other goes down. For reasons that are beyond the scope of this video, the relationship is broken, and we're now seeing large losses on locked pipelines, and it's happening to pretty much every mortgage company out there. Thankfully, at Princeton, our balance sheet is 95% liquid, and we've been able to absorb a lot of these movements. But per the point I made earlier, correspondent investors have nearly disappeared. Thankfully, at Princeton, we're Fannie and Freddie approved seller servicers, which means that we can deliver loans directly to the agencies. We haven't done this much in the past because investors like Flagstar or Wells Fargo typically offer much better pricing. Thankfully, we can sell directly to the agencies and are getting better pricing than if we could only sell to the investors right now. Many companies can't sell to Fannie or Freddie, and those guys are in serious trouble. There's just crazy volatility. It's wartime, but it's also a great opportunity for Princeton to shine. We're working through our pipeline, and we're praying that a few things happen here. Number one, the Fed slows MBS purchases, decreasing bond pricing, improving the value of mortgage company hedged pipelines. And number two, the Fed or Treasury provides liquidity to servicers, which could bring back some value to servicing and help us get better execution for our locked loans. I'm strongly optimistic about the other side of this. I think we're going to have low rates for pretty much the rest of the year. For everyone at Princeton, it's about keeping our cool under the next 60-ish days, focusing on what we can control, working hard, being thankful that we have jobs, and praying for and supporting those who are suffering because of the coronavirus. Have a great weekend, everybody. Stay healthy. Again, this is Josh Catagano, the Fun Funder. And it's Friday. It's time for a damn Zoom happy hour or something, man. Cheers, y'all. Stay safe.